resume the recording here. So I think we got it going now. So welcome to everybody. Yeah, that's we got a good crowd today. So I'm just going to start rolling here. Let me get up my PowerPoint to start. Okay, and we got Lynn on the phone, Lynn online as well. She's going to be helping me out monitor the chat box. And so, like I just mentioned, if you guys are interested in asking a question, you can come off mute and ask it. Or if you prefer to just go into the chat box, we're monitoring the chat box and we'll answer questions as we go along. This is a very informal presentation. We just want to give you some kind of concepts that we've been thinking of. We actually were working with a group of farmers on the Navajo Nation, and we did this webinar for them because they had some money coming down with this CARES Act because of COVID. And so because of that, we said, well, this is a pretty decent webinar. We should do it off Navajo as well. So we just opened it up to everybody and are presenting this for a second time. So we hope that second time is a charm, improvement, but you'll let us know that. So I don't know if there's any other housekeeping. Lynn, of course, Lynn's free to come on if she hasn't any other housekeeping and can let me know. But I think we are all ready to go. So with that, I'm gonna start. So welcome everybody. It's a pleasure to have everybody here today. I hope everybody's in the right location. This is a record keeping for small. Oh, you know what? I didn't change the title. Look, I'm reading my thing. I changed this whole presentation and didn't change the title. This is not record keeping for small farm enterprises. It is record keeping for small businesses. So I've taken out all the the references that we talked about, like a tax form called Schedule F. That's all gone, but I missed the title page. I guess sometimes the things are right in front of you, you miss. But this is definitely the presentation of record keeping for small businesses. First of all, what I'd like to do is thank the people that provide the funding for this webinar. All the trainings that IDRS does is totally free of charge to entrepreneurs, but it is funded in a way, pays Lynn and my salary, pays for this the meeting platform, Zoom, and all the other stuff that we do here. So we have three big sponsors. It's a USDA Rural Development. They fund a number of our programs in California, Nevada, and Oklahoma. We have the U.S. Small Business Administration. We got a grant from them, Prime Grant, that allows us to work outside of those areas. And then specifically in the state of California, we have some funding from the California Governor's Office of Economic Development, Business and Economic Development, funded under their Technical Assistance Expansion Program. And so we're very happy to have their funding as well. So thank you very much to these three sponsors. For those that are coming to this and maybe it's their first webinar, who we are. So our official name is the Indian Dispute Resolution Services, Inc. We're incorporated. That is our official name. We've been around since 1989. We still go by Indian Dispute Resolution Services. Oftentimes it's abbreviated. We use the acronym IDRS. When we have been working in an economic development capacity, we were getting these questions about, and I think it was oftentimes, more as a joke instead of being serious, but a lot of times they would ask, are you here for a dispute, or where's the dispute at? And so we've actually kind of changed our name a couple of times and when we're working in economic development capacity. But about 6 years ago, we actually came up with the name, the Acorn Project, and that name is kind of stuck. And so we call ourselves the IDRS Acorn Project. And that project is specifically providing training and technical assistance to Native entrepreneurs, generally in the West, but we are funded to go work throughout the United States. You'll find information, and that's our logo on the left for Indian Dispute Resolution Services, and our IDRS Acorn Project logo is there on the right. Our website, we have a website called idrsinc.org. You'll see that in my email signature there, or my email address. But we have a website that's built that's forward facing directly for entrepreneurs, and that's nativebiz.org. So please, check that out. You can go and get all kinds of information there as far as signing up for technical assistance. We're a little behind in posting videos. We're going to be posting our videos there. We have just other information. We have our training schedule. So a lot of good information is there at nativebiz.org. So who am I? My name is Mark Thompson. I'm the executive director here. I've been the executive director for about 4 years now. Prior to being the executive director here, I was the business manager. I've been at IDRS a little over 17 years. So yeah, I've been around. So I'm probably seen a lot of you guys on the call in the past. So welcome. We're located in Plymouth, but we go all over. A lot of our work, especially in the Acorn project, is community based. So we're training on res. Of course, during COVID, since March, there has been no on-res trainings. We've been doing everything online. So now, the cyberspace is our kind of our community. So we're training here until this COVID kind of goes away and we can get back in community again. That's our phone number and my email address, and you'll see that email address again. Before I get into objectives, I would just hope you guys, let me stop share on this just a second. I'm actually going to share another screen, my web. I hope this shows my web page. Let's see if this does. We'll see. Can everybody see my web page? It should say Zoom right now. I hope everybody can see that. All right. So I just wanted to share a couple programs that are happening right now that it's hard to schedule a webinar and get it out as quickly as we'd like to, but I just wanted to alert people about it. So the first people, I know there's people from all over the country in here. I saw Mary Beth in here. I know Mary Beth's out in Oklahoma. So for some of this isn't going to be applicable to you, but for the people that are here and for the people that know people in California, I want to alert you guys to the California Small Business COVID-19 Relief Grant Program. The application for this opens tomorrow. And this is a huge grant program here in the state of California. It is, there's going to be in 2 rounds, and they're going to be distributing as much as $500 million to entrepreneurs here within the state. And what, there's some regulations. You had to be in business since June 1st of 2019. And it's actually focused on small businesses. If you make over $2.5 million in gross revenue, you're not eligible. But they actually have a tier for much smaller entrepreneurs that earn between $1,000 and $100,000 a year. They're eligible for a $5,000 grant, but they're pushing out a lot of money. They're looking to really push this towards to rural communities, to people of color. They're trying to reach out to people that haven't been able to access a lot of the other funding that's been coming down from the federal and state governments. So I want to encourage everybody to apply for this that's in California. If you know people in California, get this out to your networks. If you're here in California, you have friends in California, send it out to them, send it out to the tribes. So we're actually right now in a big push to contact a lot of tribes, our partner tribes, but then even tribes we haven't worked with, so that they can get that out to their membership, because this is a great opportunity. Like I said, the application period opens tomorrow and it closes January 8th. One of the important things is it's not first come, first serve. So you don't have to jump in tomorrow when the application opens at 6 a.m. As long as you get your application in before it closes on January 8th for the first round, they're going to be, all your, you'll be equally, weighted. When they make the judging, and like I said, it's not first come, first serve. What they're really doing is going and looking and trying to make sure that they have an equal distribution of funds between, different groups of people, different areas of the state, making sure that, not all the money goes to urban, but an equal portion goes to rural. So they're going to really be doing. And I don't know all the behind the scenes as of yet. We're learning every day. Things are changing. Did want to let you guys know that IDRS has set up a web page to assist you guys. If there's anybody that needs to get assistance in applying for the application, more information, just ask questions, because we are a partner organization. We're on the daily webinars, finding out about the grant. We're seeing questions that are being asked by other entrepreneurs. And our website is nativebiz.org/CalCovid, CalCovid, CalCovid. And that's where our address is. You can see it up there at the top. And I hope you guys can see that. Actually, I can't make the web address up here larger, but it's nativebiz.org CalCovid. You can see we have some information here about information about the grants. If you click here on this first link, that actually takes you to the grant website where you can apply. And then we have a big blue button, and that big blue button is if you want IDRS to assist you and apply for this grant. Just click that button and it'll go to our spreadsheet. There's also a lot of webinars. You may have seen me post on Facebook that they're having, the SBDC, California SBDC is having presentations on this all the time. They're doing them daily at 11 a.m. But I asked you, hey, forget that today. Come to this presentation. We're still filling you in about the grant. But those are other opportunities to learn. They also have a Small Business Majority is going to be doing a big webinar tomorrow at 1 p.m. And of course, all these are free to attend. Come here, nativebiz.org, CalCovid. Check it out if you're here in California, if you know people that are in California. Please let us know. We'd love to help them apply. And even if they don't need assistance, encourage them to apply, because there's a lot of money there that can really help people in this time of need. Final thing I'm going to say is also, if you guys aren't on our Facebook page, it's facebook.com/IDRS Acorn Project. We're posting a lot about these things. You can see here I've posted about the SBDC's presentation that's coming up. That's actually starting right now. Of course, we ask questions. I'm posting about the grant application. There's our website for the COVID relief grant where people can get assistance. So we're doing a number of these things. So I encourage everybody to come and like our Facebook page, share our Facebook page. That would be very helpful. If you would share it with your friends that you think might be interested. And then the last thing I want to do is I came to our Facebook page, not only just to get you guys to like it if you haven't liked it, but to also make you aware of a grant program that's available throughout the United States. So didn't want to give just the California peeps information, but this is the Rural LISC Rural Relief Grant. And this is the second round. We've posted about this before. We also have an assistance program. We'll help you apply for this grant as well if you need help. And there's information here in a post on the Facebook page. The way this works is you're only eligible if you're in a rural community. So that's a community of 50,000 people or less. Every round is separate. So like I said, we're in the second round. This round lasts from December 29th through January 5th. And so people in this round, if you've applied for round number one, please come back and apply for round number two, because your application from round number one does not count anymore, right? They're going to start totally fresh. So apply again for this. And grants here range anywhere from $5,000 to $20,000. And somebody on our team, and it's before she was on our team, but with our encouragement, she applied and she actually was awarded. She was awarded one of the grants from LISC, and she's actually running our social media campaign. I don't think she's online, Roxanne, but yeah, it's a pretty awesome project, and this is open throughout the United States. The only real issue here is you have to be in a rural area. There are some other, there's always these rules. You have to be an existing business. There's a certain date on that, but we can help everybody, if they contact us. And you'll actually see in this Facebook post is where people can contact us. So with that, that's my promotion, and I'm gonna stop the share on this, and I'm gonna get back to the presentation now. let's see here. Okay, so objectives. So why are we here today? So got you some of the introductory information, got you going on grants, and some of the information that's in this presentation is going to be very important to you if you want to apply for those grants. So why are we doing? So some of the things you're going to learn today. Why are we doing this? You know, some important concepts of the record keeping process. You know, learn what record keeping is and why it is important to do. You know, when you're keeping records, do I keep everything? Do I keep a little bit? We're going to talk about the records that you might think about keeping. And we're going to talk about some different systems and how to implement them. And then it's not just about collecting all these records, but what are we going to do with these records when you know, after we've collected them? So we're going to talk about that. And like I said, this webinar was originally developed for a group of farmers on the Navajo Nation. We were talking about the Schedule F. The Schedule F is a schedule that you attach to your 1040 if you're engaged in farming activities. And so I took out a lot of the farming stuff, but I left in and I actually replaced some of the stuff that we talked about Schedule F and talked about Schedule C, because one of the key things why you're keeping good records is because you want to accurately report your taxes. And so I thought, well, instead of taking all of the tax information out, I'd go over a little bit if we had time at the end of the presentation and talk a little bit about income taxes, how your record keeping system can help you in preparing for your income taxes, and why it might be important to file income taxes for your business if you haven't filed previously. Okay, so all right, we roll on here. So why are we doing this webinar? Talked a little bit about that, but also because the webinar at this time, you know, this is the end of the year. So a lot of people are going to start working now and preparing the taxes. Now, last year, the tax deadline was extended. It was originally, you know, it's always been April 15th. And I think last year it was extended to July 15th. So there may be an extension this year as well. You know, we don't know that as of yet. So we'll continue to plan for April 15th. But as the end of the year, this is when a lot of time people start getting their records, right? They put it off all throughout the year, and now they want to start hurrying because now they're going to start preparing taxes. Maybe some people want to file early because they have a refund coming and they want to get that money as soon as possible. So the webinar should help you in that, but also this is a good opportunity as you start the new year, right? Make it one of your resolutions. I'm going to keep good records so that when next tax season rolls around, I don't have to just, you know, I don't have to just stress out. I don't have to go and try to track down stuff and find it. So we're going to talk a little bit about different systems, moving everything from, you know, from the simple to the more complex. We're going to try to keep it as simple as possible, but that's one of the reasons why we're doing this webinar, you know, to keep everybody on pace. So let's just start and talk about what is, you know, so why, you know, so the record keeping process and what is record keeping. And the definition of that is just an orderly and disciplined practice of keeping business records, right? And we put this because we're talking about it in a business concept, but this could be for anything, right? It's just how are we going to keep things that we want to know? Could be recipes, right? It could be anything that you're wanting to know. Is there a system that's going to allow me to use the records that I've kept to find information that I want to find? Maybe it's to make a report, you know, like when I mentioned recipes, right? Maybe it's to bake dinner for your family, or maybe you're a catering business or you're catering for a community event, right? Being able to easily track down those recipes that you need. So it's really keeping information that you need to operate in any way, whether it's in your family, in your business, and then being able to easily access that information and then get out the information that you need at the time that you need it, and an easily and pretty you know, kind of just kind of, you know, an easy way to be able to access those records. So some more reasons that keeping records is important. You know, one of the things a lot of times that people are coming to a presentation like this is because, you know, and why they think that they need to keep good records is for reporting to governmental bodies, right? And the most important thing that we think about that, or the most prominent reason, is generally income taxes, and those can be state and federal. Could be sales tax. I think I just saw Candace come on the line. Candace is out in Walker River, and they have a finance department there, and they keep sales tax. A lot of things on Walker River, they have a big fireworks business, and so you have to keep sales tax records. So that's both for the state and even for tribal departments have requirements in keeping records. Could also be for payroll taxes, right? That's a different form of a tax that you have to track. There could be different reasons why you need to get a license or a permit. So all the different regulations that different governmental bodies would have. Certification for government contracting, like an 8A certification by the SBA. You're also going to have records to apply for that. And then it's not just reporting to governmental bodies, but also reporting to service providers. Could be a lender. Lenders always going to want to see good records. Insurance companies, whether it's you're doing liability insurance or workers' comp. And then we just talked about, before we went into the presentation, about a couple grants that are coming up, right? We just talked about the California Small Business COVID-19 Grant Relief Program, or Relief Grant Program. We also just talked about the LISC Rural Relief Grant Program. And so both of those have different requirements about information that you need to be able to provide. And so you're going to want to be able to have that information not only at your fingertips for the application, but if they actually ask you to submit documentation, and that California COVID-19 program asks you to actually submit documents, to actually scan in documents that you would have. And so if you don't have those at when it comes time, that may jeopardize the awarding of that grant. Even if you've been awarded, they may actually pull the grant back. So that's another reason to keep good records, because you never know when it's going to be needed in the business. Also, reasons why you might keep good records, and not just reporting and thinking outside the business, but really a good reason to keep records is for yourself. And you're doing business planning. If you're making things, right? And this could be everything from growing, right? When we're talking about in the farming context, but also if you're just producing your a beater and you're making earrings, and you want to know, okay, well, let's see, I'm going to a powwow and I'm going to sell, having records. If you went to that powwow last year, what was popular there, right? Maybe you're going out of your area and you're going down in like to the Los Angeles area. And now, of course, this is kind of an obvious thing, but knowing that, football teams sell there, so I should have some Rams colors, I should have some Chargers colors. Maybe Raiders sell good because the Raiders used to be in LA, or just a lot of people like Raiders, right, in Indian country. So keeping records like that can also help you determine what you should be producing in the future. You could also, things that you produce or even things that you buy to use in your business, you can test to see how effective those products are. Test other conditions, within the business. Be looking at other competitors and how what they're doing is, comparing to you. If you're doing online marketing, we have a lot of these records that we keep in email marketing or social media marketing, right? And we're seeing, okay, did this email using these keywords, did this do well? Or did it, and there's actually something called A/B testing, and you're actually keeping records of all these different things so that as you go through and you send additional marketing materials, that you're improving them each time. And then, so that's just planning and getting better in your business. And then just in the day-to-day operations. So detail tracking, right? So you want to know who your customers are. You want to know who your vendors are. You want to know what inventory you have on hand. How much you're paying somebody in their payroll, right? Because you're going to have to, if you have employees, you're going to have to cut a payroll check. All these are different things. And of course, the thing we're going to be talking about today is financial transactions. All these are just the things that you have to keep track of all the time just to even be able to operate your business. And then I always like to say, this is not just applicable to the business concept. This works in household management and planning as well, right? So throughout your life, learning how to keep good records will definitely serve you. So Rich, which records do we want to keep? So in this presentation, we're going to be talking about financial record keeping and really looking at financial records, sales, things that you buy, and how we keep track of those type of receipts and invoices and things like that. However, within your business, we just talked about different examples of things that you can keep track of, and that could be the marketing and that email testing, right? That's not financial. That's showing you how many people are responding to your email. So there's a number of different things, and I just listed a couple here, and I put manufacturing time and processes. And I don't want people to think of, I'm just talking about big businesses here. I'm also thinking about the smaller, somebody who's that beater again, who's making earrings. Are you keeping track of how long it takes you to make the earrings, right? Because that time, you want to value your time in a certain way, and you want to make sure that you're getting out the amount of income in those earrings that you put in, right? You don't want to go and make a beautiful set of earrings that you spend 10 hours on and then sell those for $20, right? That's $2 an hour of your time. That doesn't even include the materials that you put in it, right? So it's knowing how much time you're putting into each piece. And then you can actually choose, okay, these aren't selling, I can discount, but I'm still making a profit. You know how to be able to manage your business because you have those records. So that's what I mean by manufacturing time. It's everything from the solopreneur, solo native artist, all the way up to the larger corporations, right? Larger corporations, they're looking at every little thing in their business, right? How, if it's an assembly line, how much does this person contribute? What if we moved them 5 feet to the left? Would they improve their processes, or would it be worse? And so they're always looking at this kind of stuff. So you guys can even do this stuff in a small scale. And then, of course, looking at financial records, receipts, invoices, copies of checks, bank, credit card statements, 1099s, which you get as an independent contractor. And then, of course, we're going to want to keep track of our cash transactions as well. So let's go here. Some questions to ask as you are designing your record keeping system. Okay, so we've talked now about why you want it, and hopefully we've convinced you that it's important to have a record keeping system. And whether it's simple, and we'll talk about some very simple ways, up to a more complex and different ways that you can store those records. But now, some questions to ask as you're designing your record keeping system. What is the goal that I want to accomplish? Right. So if you're just want to at least get the records to maybe your tax person, and all you really care about is taxes, I hope I've convinced you that there are some reasons why you might keep records, more detailed records to help plan your business. But let's say you say that's not important to me. Maybe we'll start with the shoebox method and just keeping your receipts. That's fine. But really you want to start, what is the goal and what do you need out of your record keeping system? And then once you get that goal, what pieces of information do I need to accomplish that goal? Maybe if it's just preparing, making it very easy to prepare a tax return, you just need to get your sales for the year, and you just need to get your receipts, and maybe you don't have a lot of those transactions and they just go into one shoebox, and you give that to your tax guy, and that's enough, right? But if you want to do business planning, you're going to need more pieces of information, and we'll talk about where we store that, and where in my business is that information, right? So right now we're talking about financial information, but when we talked about the manufacturing, those things may be in different places, right? You may have to time yourself as you're sitting there beating the earrings, right? And that's going to be in a different location and getting those records than it would be if you're finding the receipts and that type of information. So okay, and then so now we're starting to design the system, and we want to know, what are we trying to find out from these records? And so for the most simplest case, and that's what we're going to focus on in this webinar, is the most simplest case. But as you get larger, and even in financial records, you're going to want to come and look at even more complex financial transactions. But just the most simplest case, what we're going to be focusing on, because this is what you have to report on your 1040 through the Schedule C. And we'll talk a little bit about taxes later. But we're going to want to look at income. So how much you've received from your business, right? These are your sales, right? So all your sales and the gross sales you have. So all the money that you've received. Then we're also going to look at expenses. So this is all the money that you've had to spend to operate your business. And, could be receipts. And we've talked about where some of them come in, maybe a bank statement, it could be a credit card statement, could be the individual receipts, could be you've spent cash and you don't have a receipt, right? And so we're going to talk about keeping a notebook. And so just having something like that may also be good. And then if you subtract your expenses from your income, that is your profit and your net income. And that's essentially what you're going to actually report on the Schedule C, and then that net income is then going to go to your taxes. And so those are the basic things that we're going to be trying to find in this webinar. Okay, so as you're designing your record keeping system, some thoughts that you might want to keep in mind. So start simple and build it with your business, right? So one of the things we're going to show today is QuickBooks, and I'm not going to go into QuickBooks. I'm just going to pull it up on the screen for those of you who may not have seen it previously. But QuickBooks is, QuickBooks, it has a lot of stuff in it, right? And I use QuickBooks because I'm an accountant, right? I've been here doing the accounting for IDRS for the past 17 years, right? So I've had a lot of experience in QuickBooks. But you may not be an accountant. You may not want to be an accountant. You may not want to do bookkeeping and do that type of work, right? So learning QuickBooks may be too much for you, right? And it may be overkill. If you have 10 transactions a month, doing QuickBooks is going to be way overkill. Like I've done bookkeeping for other businesses where they have, hundreds of transactions in a month, right? And those are the type of things where you want to actually, you want to use a system like that. So when I'm talking about QuickBooks or any of the more advanced stuff, don't think you have to start there. Actually start with the most simple things and then, and go from there. So the next thing is how detailed do the records need to be, right? And that's going to be based on your goals, the cost of the system, right? If you're running a very small business, start with a very small cost. How much time it's going to take you, right? If you're not doing a lot of transactions, don't get into something that's going to take you a lot of time, because what we want to encourage you to do is to do your system. And if you're doing your system, then, that's really the most important thing, right? You don't want to make it so cumbersome that you abandon it, because then that's defeating the whole purpose. One thing, I hate to use the term garbage in, garbage out. I don't like that kind of negative connotation of garbage. However, it is true in this concept. We want to make sure that good information goes into our record keeping system. And from that good information, then if we're trying to get reports out, if we're trying to get other information out of our record keeping system, it will be good information that we can use and is actionable. So we want to be careful to make sure that when we are putting information into the record keeping system, that it's accurate, that it's the information that we need to be putting in there. Because if you put in inaccurate information, and even in QuickBooks, right, even though QuickBooks does all the math for you, if you put in bad information and then you try to get that information out, it's not going to be good. And then just a little tip there, that a separate bank account, or I put accounts, but a bank account, credit card account for your business, anything that's separate, that does help, because right now you're not having to go through your bank account, your personal bank account, to see if, is this transaction personal or is this transaction in my business? You can actually just make sure that everything in those bank accounts are, business related. So, okay, let me move on here. Okay, so, I was looking around and I don't think I have anything. I forgot to get my shoebox, so hold on one second. This is a toner cartridge box, but it's the only thing I had in my closet sitting there. So I'm going to use this as my shoebox method because it is a shoebox. It's a little dusty. I haven't touched it in a while. but it's a box. You guys get the you guys. I'm trying to use my props today, so this is my first prop, a box. And so what I want to do is talk about the shoebox method. And in the most simplest method with the shoebox method is everything just goes into the box, and it's going to be taken out and sorted and processed at an end of a period. And generally, that may be the end of the year. It may be, it generally is the end of the year, only because you're doing that just to prepare for taxes. And sometimes you may not even handle the receipts and everything yourself. You just throw everything in there, and then you give it to a tax professional. It may be an accountant if you have that level of tax preparer. It may just be the person down at H&R Block. Maybe your wife. So we used to teach a curriculum here, or still do, but called Indianpreneurship, and we had a story in there of a gentleman, and he wanted to go apply for a loan. Sorry about that. Should have muted my phone. So he wanted to go apply for a loan, and then when it was time, they said, okay, well, where's your records? And he came, and all he had is a giant box. So that's the shoebox method. And he was just going to go down there and give it to the person down at the loan office and say, here's all my receipts. I will say this, though, something like that is better than nothing, right? You're keeping records. There's some people that keep nothing. They don't have anything, that makes it very hard to know how much you spent. And although I mentioned an audit in here with the IRS, for most individuals that are running very small businesses under $100,000, the chances that you're going to be audited are extremely rare. Extremely rare. A micro chance. And I want to say that just in case for the person that gets audited, but I did want to let people know that. So, but I just mentioned the case of an audit, that there's always that possibility. And so if you don't have any receipts, right, and they come in and actually want to look at your records, you're not going to have any documentation, right? So even doing the shoebox method and keeping every time you get a receipt in there, that's something, right? You've got at least proof that you're like, hey, I know I spent that money on those shovels and it's in here somewhere. I'm going to go find it. So, and then, going back to the bullet point before, if you're not giving it to a tax professional, this might be you with the shoebox method, and you've put it off all year. It's been, you haven't wanted to get into it, but at least now you can go and bring out your adding machine and start adding it up, right? So some of the pros of the shoebox method, right? So like I said, you're doing it. You're at least keeping records. It's inexpensive, right? The cost of a shoebox, that's free, right? Cost shoes, but you can get free boxes places, even if you didn't buy the shoes. It's easy, right? Because you're throwing it in. At least it's easy until you have to start adding stuff up. It's accessible. Everybody's going to know how to do this. What some of the cons, though, is that if you want to use this information, we hear a dog barking. No, I hope it's not me. My dog's not in here. What some of the cons on the shoebox method is if you're wanting to use the shoebox method to go and use the information in your business, you're not going to be current on the data, right? You're normally only taking these receipts and your income, your invoices and stuff out of the box when it's time for, when it's time for tax time. So if you want to know, so what were my sales in July, right? You're not going to know that information maybe ever, because unless you calculate it for each month, but you're definitely not going to know it at the time if you need to go back and find stuff. So that's one of the real big cons about this. And like I just mentioned, is if you're not going in and putting all this data in there and writing it all down and kind of sorting it out, it's not going to provide a lot of actionable information for your business. You're going to know at the end of the year what your income was, what your expenses were, but and so it's preparing you for taxes, but not a whole lot else to be able to manage a business. End of year can be time consuming. I think that's why a lot of people do put off taxes though, right? They put off taxes because it's going to be a real pain. Now I got to go either track down all that information, which hopefully you wouldn't have to do this because it's all in your shoebox, or I at least got to pull out the adding machine and go through all these receipts. I got to remember what this receipt was about. I got to put it in different categories. It's a real pain, right? A real chore, a whole weekend sometimes or more to get ready. And it's subject to mathematical errors, right? You hit the wrong thing on the adding machine, boom, now maybe you've inflated your expenses 10 times or deflated, right? You've reduced stuff and you're not deducting what you should get. So the shoebox method, just want to say, if we're starting, let's at least do the shoebox method. Start collecting those receipts, things that you, when you sell things, start at least putting a note in there that you have an invoice, so this could be, if you're a very small seller, you just write on a little slip of paper and throw it in there. I had a sale. When you have a cash transaction, even if you don't have the receipt, just write down a note. On this date, I spent this amount, and you throw it in the shoebox method, or you throw it in the shoebox, right? At least you're collecting data. So that's how we're starting. Okay. So then I talked about other types of boxes, right? And so in other types of boxes, so I want to show you, got some more props. So we got, you guys are all familiar here with the accordion files. I got a small accordion file here, right? I think it's got a number of different tabs there. I don't have anything in there right now, but that accordion file. Here's something, maybe this could be a weekly planner. This is a much bigger one, and it's got 7 different tabs in there. So you guys are familiar with that. Here's a one I've had for years. This is my gigantic accordion file, right? Let's open this guy up. I've actually used this. I got papers in there, and you can see you have all kinds of different stuff, different categories, alphabetized, different numbers. If you wanted to do months, different categories. It's got income and insurance, pre-labeled, but of course you can write over that and do your own. So these are other types of boxes. And the only difference between this and the shoebox method is it's allowing you to have a little bit more organization that you would have than just putting it all in one shoebox, right? Maybe if you need to find a receipt in the middle of the year, you need to get a refund on something. Maybe you wanted to see what your sales were in this month. You can take those invoices or the sales slips that you've written out of that month because you've at least sorted it into all the months, and you can add those up. And now you have some actionable information, and you can get to it rather quickly, especially if you don't have a lot of transactions, right? Because you've sorted it within the month. And along those same lines, you can use boxes like that for a tickler system. So, so right now we're going totally analog, right? No digital stuff. And so you don't have to be digital to keep good system, a good system. So, so let's say you wanted to know like when you should be paying your bills. Every time you get a bill in there, you may put that, okay, this bill has to be paid at this time of the month, right? So you have a slip of paper in there, or when the bill comes in the mail, you throw it in there, and then at the beginning of that week to check that that sleeve to make sure that all your bills are paid. In sales, right, we have callbacks. So now with smartphones and everything, a lot of this stuff is electronic, but it doesn't have to be. It could be where every time I go make a phone call, I put that in a little box that says callbacks, and I just remind myself every week I'm going to check my callbacks. And so you can make your own little tickler system using accordion files like that. And you can see, so if you're starting the shoebox method, you've started, and then if you're using some accordion files or a file folder system, right? You just put file folders and put that in a file cabinet or just in a box, a file box. You're getting a little bit more organized, right? You're starting to sort your receipts, sort your invoices, sort your contacts, and you're doing it before the end of the year. So it allows you, if you need that information, that, you have access to it. It's still fairly inexpensive, right? I mean, these boxes don't cost a whole lot of money. Find them, on the box stores, online. It's easy, right? I mean, it's not as easy as just throwing a receipt in a box, but you're going to organize it the way you want to do it. So it's still fairly easy. It's much easier to find the items than if they're in a shoebox. Depending on how you organize it, though, it might not be up to date. And you still, especially when we're looking at financial transactions, you still have to pull it out of that box and do the math on it, right? So you're subject to those mathematical errors. So let's go on. Let's talk about some other methods. So I got my notebook. Let's see. Hold on. I got to show you all my props today. Oh, right here. Just my little notebook here, right? This is just a little notebook. And I'm going to actually show you some things that you can write in the notebook in just a minute. Just as a template, but you don't need my template because it can be very easy. But the nice thing about the notebook method, and really I should say, is one of the things that is important, and what you might want to do is, especially in some of these more simpler systems, is to do a couple of the different things. You may want a shoebox where you throw all of your receipts into, but you may also keep a notebook so that you can know when those receipts came in, and it allows you to access. So you have the documentation, the backup, in case you ever do get audited, or you ever need that receipt for a refund, whatever it is, or you made an error, you can always go back to that receipt. So you have that documentation, but then in the notebook, you're actually duplicating that information so that it's much easier to find, and you can go back and add things and do everything on paper, So a simple notebook like this, you can just write down every time you have a cash transaction. It could be, and actually I should have pulled one out. I don't have it accessible to me right now, but if you go to the office supply store, a lot of times they have, for the old accountants before computer systems came in, they had ledger books. So when I was in college, we learned on a ledger book just so we would know how to do it. And you learn in a ledger book, it has all these different lines. And a ledger book is essentially the same thing that a QuickBooks would be doing, but you're doing it all on paper. Right. So when you get a transaction come in, you're writing that, okay, I bought, I had a meal, I had a travel meal, right? So you would write that meal down, and you would write the date, and you would write the amount. And then all those amounts are in a column. And then at a certain time period, you would add all that up. Right. And so they had these ledger books. And then there's even other specialty books. So here's one I didn't take out from the farm, but farm records, right? If you're keeping, calculations on how much grain you're feeding to your livestock, if you're keeping track of weather, all those things can go into a specialized book. And those may be the same things that you keep, like if we were doing that marketing testing, right? Keeping those records as well, or keeping records about how long it takes me to produce certain pieces of jewelry. I'm keeping those records so I know how to price accordingly. And then a log you'll often see people keeping on paper, although now there's electronic forms, is a mileage log. And a mileage log, you might just have that in your glove box of your car. And then every time you're doing a business trip or doing anything for business, you can write down, that, if you want to get real detailed, you can write down your odometer start, your odometer end time, but you don't really need to do that, but just writing down the date, where you went, and how many miles you went, just so in case, because technically, if we're using the correct procedures that are determined by the IRS, they will accept a mileage log, right? You don't have to actually show gas receipts or anything. They actually allow mileage to be deducted. And because of that, they will accept a mileage log. So if you had a long log that's all handwritten, that is fine with them, right? But that's actually what they would want if you're ever audited. Now, not everybody does it. I'll be frank with you. I hope the IRS is not listening. I don't keep a mileage log, right? We have some vehicles. I should have mentioned this at the beginning. So my wife runs a small horse boarding business. And so we have some vehicles that we solely use for business. So we don't have to keep a log on that vehicle. And sometimes, like on other vehicles, it's just easier just to estimate, okay, 25% of this vehicle was used for business, right? And you can keep, and do the transactions. That's how a lot of people do it, especially when when you're a smaller business. But if there's ever the possibility that you are going to be audited, the safe way to do it is do a mileage log. So if you want to be, I want to give you both sides of the coin, right? There's other ways to do it a little bit easier, but if you want to do it and go all out, there's the opportunity there to do a mileage log as well. So what are the pros with just, writing stuff down and putting it in a notebook? You're more organized in the shoebox method, right? It's easy to collect the data. And I think it's both easy to collect the data because you're just writing it down, and then also get that data out of there as well. And with financial transactions, it's much easier to reconcile that. All those transactions are already written on a sheet of paper. So now you don't have to go and bring it out of the shoebox. You just start adding, right? And you can do this on a regular basis. You could even keep a running total, right next to your column as you're writing stuff down. You can keep and just add it, very similar to a bank ledger if you wanted to. What happens though with a notebook is, I'll just address the second thing. Obviously, it's subject to mathematical errors, right? If we're got a calculator or an adding machine, it's going to be the same problems that any of the other systems have. And as you get more records, it can be unwieldy, right? If you have, let's say, that you have, 70 transactions in a month where you're going and buying things for your business. And you have a lot of different categories in which you're buying. That's a lot of stuff to write down, right? That's a lot of pages you're going to use in your notebook. And on top of that, you have to add all that up. And if you mess up, now you're crossing it out. Maybe you have to do it in pencil, but it can be a real pain. So the notebook method does work best when you have fewer transactions, and then when you get more transactions and you start looking in there, and I don't know what the right number is, right? The right numbers, I'm sure there's people that have a lot of transactions that are still doing the notebook method, but I think one of the things there is, it will be easier to move to an electronic method. And so let me just go into those electronic methods, because we're going to come back to what you can write in the notebook in just a second. So just real quickly, the spreadsheet method, that's just using a spreadsheet like Microsoft Excel. But I always want to give free options as well. So if you have Google, a lot of folks have Gmail addresses. If you never explored it, they have the whole Google suite in there of different applications. And one of the applications is Google Sheets, right? And that it doesn't do everything that Microsoft Excel does, but for a lot of this financial stuff, it has all the different capabilities. And so Google Sheets is a great option. If you didn't have access to the internet, or at least if you could get access one time, there are even free software that you can download that free spreadsheet options like LibreOffice. And so even if you don't have access to Microsoft Excel, there are still ways to utilize spreadsheets when doing accounting for your business. So some of the pros: spreadsheets, they can do the math for you. Not only do the math, you can do formulas, so it does the math automatically. Very simple formulas. And it doesn't take a whole lot of time to learn that. And IDRS can help. That's one of the things we do, is provide technical assistance. They can be backed up, right? If you lose that notebook, you're going to be in a world of hurt, right? I mean, if that has all of your data and all those cash transactions, and somehow that goes missing, oh boy, you're going to be pained. So that's the one thing that's nice about a spreadsheet, right? First, it's saved. You can save it, every time you use it. You can email it. You can put it on cloud storage. So you can definitely keep those records, and they're a lot more secure. And it can also be sent to a service provider. So if you said, hey, here's my tax guy, it's hard to ship all those receipts to him, but you can just email him your spreadsheet, and he or she can work off of the spreadsheet in preparing your taxes. So some of the cons, although you can do this on a phone, because the phone is so small, it does get to be a little unwieldy when adding a lot of stuff. So you can do this on a phone. I don't want to say you can't, but other than that, if you want to do it the most simplest way, you do have to have access to a computer. And so, and some people just don't have that, or have a computer that operates fast enough, or have access to the internet. That could always be an issue. And like the Google Sheets option, right? That only works if you have access to an internet connection. And there is a learning curve with any of these different methods, right? So when you get on, maybe you've never used a spreadsheet before. It's going to take you a bit of time. If you need the information right now, maybe you don't want to wait to learn. But I do think is if you're willing to put in a little bit of time and learn spreadsheets, and you don't have to learn a whole lot about them, just learn a little bit about them, you'll get a lot out of it that you can use in your business. So with that, I want to stop sharing here for 1 second. I know I'm running up close to an hour, but if you just indulge me, I'll just go a little bit over here. And I wanted to pull up, I'm going to share a different screen. So let's see here, go back here and share this screen. And I'm going to, this is going to be a little small at first, but I'm going to bring it and make it larger. Okay, so what I have here is this is an Excel, and I have some different logs. But see, these logs can also work for your notebook, right? Now you would have to hand write them, but you can use these different logs in the notebook, and then of course in the spreadsheet. The spreadsheet, you could see you can do it all for you, and you can do all the math. So here's the income log. I also have it, and we can send this to you. I don't have it ready just yet because I haven't put in all the formulas. But if anybody's interested, we can definitely email this out to folks. So here's an expense log if you wanted to have something separate, right? And you can see that in the income log and the expense log, I only have 4 columns: a date, who I bought it from or who I sold it to, what the category is and what the amount is. And then income and expense log. So here I have it all on one sheet. So if you have a little bit bigger notebook, maybe you have room for more columns. Now you're just keeping all those 2 logs on the same page, right? And this especially helps if you don't have a whole lot of, if you have a lot of any one transaction, maybe you want to use individual logs. If you have, not a lot of transactions, it may make sense just to keep it on one page. So the next, so I have here a mileage log, and you can see this is a little bit more complex mileage log, because I have a date, the location, description of the trip, your odometer, mileage. IRS doesn't need all this, but if you wanted to do this, this would be like totally make you bulletproof for the IRS in case of an audit. But you can see with these columns, this is also something that you can do in a notebook. The spreadsheet, the only thing that the spreadsheet is doing is it's allowing you to do it and to add these columns in a much easier way. But you can write this data and then also hand tabulate with a calculator or with an adding machine. And then so let's go back here to this income and expense log. And since I'm running a little bit long, I'm not going to actually do the work here, but just to pretend for a moment that I have some different incomes. I've sold some different things to people, and then I've had a number of different expenses, and maybe I have 10, 12 different expense items there, and a number of different categories. And so I think one of the important things to talk about is, now that we've got these records, what do we do with them, right? Especially in this financial capacity. So what are we going to do? So one of the things that you might do is keep a monthly profit and loss statement, right? And that just shows you how much you're earning every month, how much sales, how what your total expenses were, and then of course at the end you subtract those two, your expenses from your income, and you get a net income or your profit, right? And so if we had all these filled out, you can do this, and Excel will do this for you, right? You can actually have calculations to actually pull this over to a number of different transactions. But if you wanted to do it all on paper, so you got your whole expense log, you can just add it up and write this out. In accounting, we've always been taught to use what they call T accounts. And let me just show you what T accounts are in case you just wanted to be fancy. And so a T account it's called a T account because it looks like a T. And you can see the T here. There's the top of the T. There's the side of the T. And we have our income here. And then we have a number of different expense categories. And what you would do is, why there's actually two sides. So one side is for actually spending the money. And then one side is if you got money back. But typically for like expenses, all the things here are going to be filled out on the right. And over here on the income, everything's going to be filled out over here on the left, right? But let's say you gave a refund to a customer. Well, normally you would have all your different income transactions here, but then you might have an income transaction. You might have a reverse income transaction. That's that refund. And that's what we would write out. But when we're making the total, we're going to add all of the money that came in, and then we're going to subtract all the money goes out. It would be the same thing over here with expenses, right? You have all your expenses, and then maybe you actually took a refund, right? So your expenses and your car expenses went down, right? Let's say you had bought tires. That's about it. I'm going to use office expense. So we bought a computer, we bought a whole bunch of stuff for our office, and then we decided to take that computer back, right? So we're going to deduct that expense from this. And what we're doing is, if we come back here to our income and expense log, is we're just copying all these items over. We're taking something that we would have, and I'll make one up here. So let's say 1229 from Bob, and I sold a rake, and this is going to be an income, and this is going to be $30, right? And you can see that's how the income and expense log will work. And then I would take this $30 and I would move it over to my T accounts, just like that. And then at the end of a period, and typically you could do this weekly if you have a lot of transactions. You can do this every month. You would just add all these different, you would go in here, transfer all these items from your income and expense log over to your T account. And then you would then add up all your T accounts. And now you would just have a total up here. And then what you would do then is you could transfer that to a monthly profit and loss statement, right? And you could see here's those same different categories. And I made this very simple because you can actually have a lot of line items on a profit and loss. I'll show you one just real quick in QuickBooks. But for simplicity, and especially if you don't have a lot of transactions, you may have something very simple, and you would just transfer the T account. So right now I'm going to say this is our only transaction this month. So we have $30 in income, and now we can come over here and transfer it to our profit and loss statement, and there's our income, right? And you can see I actually have a mathematical calculation that adds the income and subtracts whatever this total is. And if we had different numbers here, so I'll just put some different numbers, 45, 30. Oh, actually, I don't have my transaction. You'll see how quickly you can do this. I'm just do a sum total. And now I have a formula that will add everything here in my profit, and it takes my income and subtracts all my expenses, and then gives me a net profit. And that's and now you can see you've taken those records that you've those financial records that you've collected all month long, and you've been able to make it into actionable data. And you can know, okay, this is what I'm selling. And then at the end of the year, you can actually have an annual ledger like this. And you don't even have to do the monthly profit and loss. You could put everything here. And so you could see here we had $30 in income, I'll just say in January, and I had some car expenses and some insurance. And then all this stuff will add here. And so you can even have formulas in this Excel spreadsheet, and then go here and then do this minus this. Okay. And then this can go across the whole thing, and you have an annual ledger. And then you have a total here, and you can add all these totals up, and you can get your total net profit, right? And that's just from taking what you do every single month, transferring it to T accounts to make it easy for you. Although you don't have to do T accounts, you can just do, just add, write down your different columns or something. But T accounts have always made it easy for me. And then you transfer that information to your annual ledger. And you can see as you go through the months, if you're doing this on a month-by-month basis, you can see when your income's going up, when your expenses are going up. And even though you're doing this, whether you're doing it on a spreadsheet or even doing this in a notebook, you're now having that actionable information that you could say, oh, I need to reduce expenses, or why did I have this big expense this month? Maybe it was an error, or maybe, oh boy, maybe the vendor overcharged me. I need to go back and ask for a refund. But at least you're able to look at all this information on a regular basis. And then what you would do after this, I'm going to stop the share here and then share something else. Give me 1 second. Got a lot up today. Let me see where. Where is it? I do not see. Oh, there we go. And then at the end, now you should be seeing what the Schedule C looks like. And then the Schedule C is basically your reporting of business expenses on your 1040, right? And now that from that annual ledger, you get that total at the end of the year. And now that information goes right here. Here's your gross receipts from sales. There's that income line item. You can just transfer it right to there. And it doesn't even have to be, not even if you're a big business, just that you're a small business. Now you have the information to fill out the Schedule C. Here's your income. And if you'll notice, a lot of those categories I actually set up my categories to actually mirror the Schedule C because it makes it easy, right? If I have all my different categories and they're the same things as the Schedule C, and I can just find a way to whatever I do is whenever I have a transaction, I find a way to fit it into one of those categories, then that makes the accounting very easy at the end of the year. And even if you can't, fit in to every category, they do have other categories as well that you can use. But yeah, so that's what we're doing with at least our financial records, right? So you're actually utilizing your financial records through the year by you're keeping the records, you're starting simple, you're getting a little bit more advanced, moving to the notebook or moving to a spreadsheet. And then, but as you go through the year, you're actually processing those receipts and those income into some sort of into some sort of record so that you can be able to then utilize it and use that information, know what your net profit is as you're going through the month, know what sales are. Let me just handle some questions. So we have some people that would like some copies. I'll definitely get that for you guys. And it's I think it's Malin. I apologize if I'm pronouncing your name incorrectly. Do you need to do this if you do more than one small business? Like I do jewelry and I also teach basket classes. And do you keep track on sheet or one for every job? Okay, so let me take the first thing. So I also do a couple of different businesses. So my wife and I, we file a joint tax return. And so we have a number of different businesses. So I still do a little bookkeeping on the side. So it's only, I think this year will be probably about $1,000 total. But I still have to report that. Now that's different than her business. So I file my own Schedule C for that. So I do my own accounting and keep that separate. I also do, and then she would file a Schedule C for her horse business. And she files another Schedule C because she's a real estate agent. All right, and so she does that part-time as well, and has some income from that. So that's so we actually are filing a number of different Schedule Cs, so we're tracking all that information as well. However, you don't necessarily have to track the information separately if you think the businesses are very similar. So to give you an example, so when we're writing our Schedule C for her horse business, we just call it horse training, and I forget what the title is on the Schedule C, but it captures basically everything she does with horses, even though it's technically different businesses. So we have our boarding stable where where people, they bring their horses and they pay us money to keep them here. And then she also judges horse shows, and she makes a little bit of money going out to horse shows and, judging people that are in competition. Well, we don't do a whole Schedule C, even though that's technically a separate business. It's similar enough to the horses. It's all in the horse world that we just include that as part of the same Schedule C. So you can see there's a number of different ways we're doing it. So we think the real estate is totally separate. So we do a separate and keep separate records for the real estate. But when it comes to the horse businesses, we just do, everything that's horse related. And so she also does some training as well. And so that's technically not horse boarding. It's actually more of a service, but we just count that as part of it. We'll just have a training line item. And what we have, and I don't have mine up because it's not on this computer, but if I just show you real quickly how this would work on QuickBooks. So let me bring up QuickBooks here. So this is QuickBooks, and this is the sample file that is on their form. And I don't think I can make this bigger, so I have to apologize for you. I'm closing all these other windows. I don't think I can make this bigger, or else I definitely would. Let me see if there's any way to zoom in. No, let's go here. Let's see if maybe just go into size. Okay, here we go. So this is their sample profit and loss statement. And this is for a product-based business. So they're both selling, and then they also do some services, and they keep it all in one. But you can see that they actually have a lot of the similar categories that was on our simplified profit and loss statement. And what you end up doing is just in Malin's example of doing teaching and also doing basket weaving. I believe it was basket weaving, right? Let me go back up. Basket classes and jewelry, right? So if you wanted to keep it separate, especially for your tracking, you can put it all on the same Schedule C or have it all on one report. And this is why QuickBooks is nice, because you can have a line item, and this line item where it says design income, right? That could be jewelry, right? And you have all your sales from jewelry. And every time you record a sales, from jewelry, you would actually tag it. And the way you would tag it, so you're not going to be able to see it because there are going to be different categories. But if I pull up an invoice here and I want to sell an item, and you can see all these different items, these are all different services, and these are all different items that you can sell. So you can actually, QuickBooks gives you the ability to tag it. Now you can do this manually. It's just a little bit harder when you're doing adding. But if you only have two different income totals, going back to that spreadsheet, you can have a thing where you say, okay, this is jewelry income and this is teaching income, and then just have two different line items in your in your profit and loss statement, so that you can keep track of it. Even if you're reporting to the government on the same Schedule C, you can keep track of it separately, so that here's some design income, or here's my jewelry income, and here's my teaching income. Because you can see when you go down here, there's lots of different things. And even though they have the main different categories, here's the automobile category, here's payroll, here's insurance. So those are main categories that are on your Schedule C. You can see they want to track a lot of different items underneath those, and they want to get more detail. And so they can still have the overall categories that add up. So it makes it easy for them to file the Schedule C. But then they can track those line items underneath and have as many line items underneath that just add up. That's the beauty of what QuickBooks does, is it allows you to categorize all that, and then it does all the math for you. Just real quickly, so obviously, let me go back here real quick and go back to my presentation. So the having the QuickBooks, it's going to require having a computer, right? It can be expensive, so that's also something, right? There's definitely a learning curve on it. But if you have a computer, it doesn't have to be that expensive. The cheapest QuickBooks software, desktop, I'm talking about desktop, because there's both a desktop and an online. The desktop version you can normally get for like $200, right? And you don't have to upgrade every year. They want you to, but you don't have to. Actually, a guy that I still do bookkeeping for, he's still using his QuickBooks from 2015, I believe, right? So now that's 5 years later. He paid, I think he got a more advanced one, so he paid $350, but he paid $350 one time, and he's been able to utilize that software for 5 years. QuickBooks also offers an online software, but the cheapest one, I believe, is $10 a month. And you have to pay for that. And that doesn't have a whole lot of functionality. That's really if you're a solo entrepreneur in a service-based business. This gentleman that I was doing the bookkeeping for has an inventory. And for the inventory, QuickBooks, I think that their cheapest setup with inventory is $70 a month. They may have the lower one now with inventory, but before it was $70. That's very expensive, right? You can see that's instead of $350 over 5 years, that's basically what is that? Actually, $3,000. It's 10 times the cost that you would have to pay over 10 years. So that's why a lot of the people that I work with do QuickBooks Desktop. I do QuickBooks Desktop for IDRS, do it with all the people that I work with, do it for my own businesses as well. But just wanted to expose you guys to what QuickBooks is. That's one of the things, right? It's powerful, it's flexible, has a lot of features. Like I'm just showing you the profit and loss, but obviously all the other financial statements, invoicing, all kinds of stuff you can do with QuickBooks. And if you want to do online, if you say for the convenience, it would just be better that way. There's the online options as well. I also just wanted to say, since we are talking about record keeping and not just financial record keeping, there are other software programs. There's basically software programs for anything that you want to do, right? So Salesforce is a big software package, and that's really if you want to deal with managing your customers, right? And you can put in your customer list, and every time you contact them. So a lot of big organizations use Salesforce. We tried to use Salesforce here at IDRS, and it was so complicated, we actually gave it up before we even got started. So some of these things are really built for much larger businesses, but the stuff is out there. And you can even, and even using your phone, even little apps on your phone, even using like, here I got an iPhone right here, right? So if I use, let's see here, my phone here. I hope I'm not giving nothing away, but here's my contact list, right? So I have all my different contacts lists in my iPhone. That can even be a record keeping system. Every single time that you contact somebody, you go and you record their information in there, and then there's ways that you can keep notes in there for each contact. See, so something like this can even help you keep keep track of who you're contacting. The important thing is that, going back to the beginning, right? Looking at the goals. What do you want to do? If you want to increase your sales, you want to have better contact with your customers. Okay, so how can I do that? What information do I need? Well, maybe I need to get their birth dates. Well, if I'm getting their birth dates, where am I going to store them, right? And then through that and determining what information you need and what goals you have, that's the way you can do it through some of those systems. So with that, we are actually, so we've talked about, what we're doing with these records, right? And so kind of jumped forward here because we went and did all these spreadsheets and did the calculations. And then, of course, we looked at preparing the profit and loss, and there's other financial statements as well. I wanted to keep it very basic for this webinar, but of course, obviously with QuickBooks, they prepare those automatically. But, maybe on a future webinar, we'll talk about the balance sheet and the statement of cash flows. And then, of course, from the profit and loss, it helps you complete the Schedule C, and we just took a look at that. And we did our example.
Hey, Mark, did you see Joanne's question about charging taxes if the business is located on tribal land?
No, I'm going to have to go back and go through some of these because I think I left off. Let's see here. So I'll just answer that. So is that, I might need clarification. So you're charging off taxes or you're just charging off expenses. So, if you're on tribal land, so a lot of what I'm focusing on here, because we have people from different states, and some states like the state of Nevada doesn't have an income tax, and so, so every state is different when we're looking at their state taxes. And generally that's where reservations affect taxes. Right. So oftentimes, if you're doing business on res, you're not having to deal with state sales tax. You're not having to deal with state income tax. Don't quote me on that because it could be different for every state, but that is the general rule. Whereas federal income tax, and that's what we've been looking at with the Schedule C and from the Schedule C to the 1040, that is actually where that generally is not affected by having a business on reservation. And so if you're making income on reservation, you're still expected to report that income. You get to take your taxes as a business and then pay taxes on the profit. There may be other incentive programs, and we'll talk about in just one second the earned income tax credit. But generally for income taxes, it doesn't change when on reservation. So I hope that answered it. If it didn't, please come back to me. Let me just run through these. Okay, people want the templates. So I think Joanne was asking, do we still need to charge a tax fee on sales if the business is on tribal land? Okay, so that's not dealing with income taxes, but that's dealing with sales tax. And that is actually dependent on the state, the agreement between the reservation and the tribe in the state. Okay, so to give you an example, so here in California, if you are on, if you're like selling on reservation and you sell to somebody on reservation, typically you do not need to collect sales tax, right? That would be an exempt transaction. Also, and we've been talking about doing a webinar on this as well. But if you are, if let's say you have a post office on reservation, so the way it works for California is when you put that package in the mail. So let's say you have an Etsy store and you're selling on, you sold something on Etsy, and so now you're going to go and ship that to somebody. And that reservation, that post office is on reservation, and you deliver it to the post office on reservation. Technically, that's not a taxable event because you've actually transferred ownership with it when you've put that with the post office for California sales tax. However, if so I was just talking to somebody who had who sells stuff and they ship stuff, but their post office is off reservation. They live on a very small reservation in Owens Valley. They have to drive off reservation to go to the post office. Well, technically now you've transferred ownership in an area where there is taxation, and you're supposed to now charge sales tax. So you can see it can get very complicated. And so I guess the moral of the story is, always sell on res, and then you don't have to worry about that. But that's generally what the rules is. So I mentioned earlier that Walker River had a finance department. So so that's a tribe, and they're not, so on res, you're not subject to the state of Nevada's sales tax, and you don't have to collect state of Nevada sales tax. However, you are subject to the Walker River's Department of Finance's sales tax. And so for businesses there, they have an exemption. I believe I know it's for tribal members, but it could be for all Native Americans. Whereas a tribal member doesn't have to pay a sales tax. So if you have a tribal member buying from you on res, you don't charge them sales tax. But a non-native buying from you on res, you would collect a sales tax. And the last time I heard of the sales tax there, I think it was around 5%. You would collect 5% from that person, and then instead of sending it to the state, you would send it to the Walker River Department of Finance. Of course, that's only for businesses that are located on Walker River. So that's why it can get very complicated, and it's very dependent on where you're located. So we can definitely talk offline to get more. But so I just, but I don't want to do a blanket yes or no. But in California, at least, it's generally no. But we got to, kind of look into the regulations. And if you're shipping stuff, that you oftentimes have to worry about that as well. So that's a long drawn out answer. Probably didn't answer everything you wanted to know, but I hope it informed you a little bit. So let's see. Oh, is there a class to get help with QuickBooks? We've done some informational classes, and I've done an in-person QuickBooks, but I've never, I haven't done it online, but that's definitely something to consider. So Georgette will definitely take that into consideration, and maybe because we actually have one that's written. We have focused primarily on desktop because of the cost issue, but doing one online is much easier though to teach online, obviously. So we might focus on that and look at that. But we definitely do QuickBooks kind of introductory classes. Did one for the Institute of American Indian Arts last year, and we'll definitely be rolling those out within the next couple months in an introductory class. But if you want a much deeper look, we'll definitely take that into consideration. Let's see. So Mary Beth, I think she was talking about the online version of QuickBooks is complicated and confusing. I was actually just looking at a thing last night, and it was a QuickBooks thing on Reddit where a lot of accountants and bookkeepers go and talk about QuickBooks. And they agree with you, Mary Beth, that where they said that QuickBooks is not very user friendly, and it's very confusing, and a lot of people like the desktop version a lot better. So but of course what QuickBooks is doing, because they make so much more money, it's very hard unless you go to a store. Like if you go online, everything's QuickBooks Online. That's what they're really pushing. So Rosemary's giving some information for people that sell off res. For those that sell off res. Oh, she's asking the question. I'm sorry. For those that sell off res, do we charge sales tax for, let's say, Santa Fe for Swaya's Indian market? So I would say yes. Now, I don't know specifically, but what's going on there is, right, you're located in Santa Fe and you are selling basically on non-trust land. So I would assume that, and I don't know the rules and regulations if SWIA requires you to have a seller's permit, but generally a lot of times when you are showing for at exhibitions, and Mary Beth might answer this question as well. A lot of times they'll require you to have at least a seller's permit so that they don't get in trouble. So they know that you're supposed to, that you at least are on notice that you're supposed to collect sales tax. And then, but generally because you're not on trust land, that you would be collecting sales tax and submitting it to, I think it's the New Mexico Department of Finance. I may be wrong on their title. I will tell you this, an easy way that some people do this, and this is my wife used to sell model horses that she would paint. So one of the ways that we would do it is we wouldn't add additional sales tax. What we would do is let's say the horse is going to sell for $100. We would just take that 7% out of our sales and submit it. So we have a seller's permit, and we don't do very many sales. We only report annually, just the one time. But that's essentially what we would do. And if you say, well, I don't want to eat that cost, well, you bump up your prices a little bit, right? Then you don't have to worry about, like, when somebody, like, let's say you're doing it in person and you have to get out the calculator. Okay, you're buying this for 110, and let me add, okay, let me times 110 times 7.5%. Maybe see what jurisdiction am I in, right? In the state of in California, we have a number of different sales tax jurisdictions that can make it complicated. If you just go and just say, hey, whatever the sales price is, bump it up a little bit, and then take that later and calculate it, and then submit out of what your total sales were. That a lot of times can make it easy, especially if you're selling in person. A lot of times, though, if you're selling online, the online platforms will definitely help you out with that as well. I know, so I've taught Etsy with Mary Beth, and we've gone through this kind of sales tax procedure, and like in certain states, Etsy just automatically takes it. Even if you're on res and you're not supposed to be taxed, they just have a blanket because you're located in that state. And other platforms will also help you with that kind of stuff as well. Do you provide individual trainings? We're part of a nonprofit. Definitely. Letitia will definitely be in contact with you, and we'd be more than happy to help. Let's see. Len's talking. So if you guys aren't in the chat, there's a bunch in the chat. I get kind of sidetracked here, but yes. Okay, I think I got it all. All right. So let me just finish this up because I know I've gone way over. Just a few last things, and they're all very quick because I just want to touch on very briefly because they can be complicated. Just with if you're keeping your records, so that's what the record retention means. The rule of thumb is 5 years, and certain things like tax documents, keep them forever. But like with receipts and everything, generally, unless you're committing fraud, the IRS can only go back 3 years. So you keep them 5 years, you build a little bit of a fail safe there, right? So once you get them out of the shoebox, you sort them, put them in something. Oh, you know what? And I forgot to show that. This is my big reveal to show you kind of what my kind of sickness is. Show you guys my receipt box to show that I'm not just making stuff up. So here's my receipt box. This is my receipt for every single. This is every single receipt we have. And so that you can see here's February 20. It's backwards, but that's what it is. These are all my receipts for the previous 2 years. I have older receipts out in the garage, and you can see. So I'm doing the same thing. This is, but what I'm doing here is just like I mentioned before, I have a combo system. So these are all my physical receipts, but I've gone through all these receipts and I've entered them all in QuickBooks. So if I ever needed to come back to something, I never needed to get a refund, we ever had a question or a dispute about something, I know at least what month they're in, right? They're not, I mean, everything's in here in just a big jumble for the month, but I can at least go back to the month. But then in QuickBooks, I can do all my math, and it does all the math and can run my profit and loss statement. So that's what my system is, kind of a combo there. And I wanted to share that with you guys to let you guys know I'm not just talking stuff, I do it myself. Then the last few things is about taxes, why it's important, keep you legal. If you ever are going to file, if you skip years, there's a possibility that you may have to go back and file, and that's going to cause penalties and interest. If you go for a loan, and it's the same thing with this grant program. So this is very important. I'm sorry, I'm leaving it to the end. But one of the things in this grant program, so for the California folks in the room, they're going to require that you have either a Schedule C from 2018 or 2019. Okay. So if you have not filed that, you're technically ineligible for that program. Even though you're a small business, you're earning in those income brackets, you have other documents that you can show. Because you don't have a Schedule C showing that that you filed taxes as a business, it's unless they change the rules as of right now, they're going to bounce every single person like that out. And that's a lot of people in Indian country. A lot of the entrepreneurs that we work with are not filing Schedule Cs. And that's a big problem. So when grant programs like this come, you may not be eligible. And before the grant programs, a lot of times it would be a lender, and a lender says, I can't give you a business loan because it doesn't look like you're a business. You're doing everything under the table. So that's why it's important to file for taxes. If you ever need to go get financial assistance, they want you to have proper documentation. And one of the things is a lot of people don't file because they think they're going to owe a bunch of money. But even if you own a business, and I just did this little calculation here, there's the earned income tax credit. So if you don't make a whole lot of money, as a family, right, you're filing, filing together if you're married, and if you have children, right, and having children is the important part. The federal government will actually give you money, right? So even though you haven't paid the taxes, they'll actually send you money. It's called the earned income credit or the earned income tax credit. The maximum payout is for a married couple with earned income of $25,199. So that means you can have a business where you're making your gross, your gross revenue, your income, you have a lot more, and then you have a lot of expenses. But at the end, your profit is down to about $26,000, $25,000. At that number, and if you have 3 qualifying children, the federal government will actually send you $6,660, totally free. That's what they send you. Your taxes, because of your deductions, not only just your deductions on your expenses, but the standard deduction that you get, right? You get to exclude $24,000. You're only going to owe about $300 in business taxes. So at the end of the day, you paid 0 taxes, and the federal government will actually send you approximately $6,300. So that's why, even if you're not going to file taxes, it's important to do the math to check it out, because that money is available for you. And so, just want to, so that's why we're even talking about taxes, because a lot of times it's not you having to give the government money. The government wants to give you money, but you have to be able to file and keep records and document this stuff so that you can go out and get that money back. And then this was some stuff on withholding. I'm not going to go through that because that gets a little bit complicated. Oh, you know what? I'm going to do my last joke, even though I'm way over. I'm doing my last joke. So I was going through this when I was putting this together for the farm group, because some of them are going to have to do withholding. And I saw this statement in there, and I was like, no checks of $100 million or more are accepted. The IRS can't accept a single check, including a cashier's check, for amounts of $100 million or more. If you are sending $100 million or more by check, you need to spread the payment over 2 or more checks, with each check made out for an amount less than $100 million. So I just want to let you guys know, if you guys want to send the IRS $100 million, you just got it lying around, make sure you split it up into 2 checks, okay? Because IRS can't take checks over $100 million. That's my final warning for the day. So with that, I know I've kept you guys way long. I really appreciate you guys sticking around. A lot of information to get going in this. I'm more than happy to stick around and answer questions. So thank you for coming. Be sure if you're in California or you know people in California, check out the California COVID-19 Small Business Grant. I'm mixing up the words there, but it's the Small Business COVID-19 Relief Grant Program, because it opens tomorrow. Very important. If you're anywhere else and in a rural area, be sure you check out the LISC Rural Relief Grant Program. So that could be free money right to your business. IDRS Acorn Project is here to help you apply for both of those grants. More than happy to help you. Just go to our website, nativebiz.org /CalCovid. We also have /LISC. You can also get that by going to our Facebook page, and we'll have all that information there as well. And then you have my email address. So if you can't find anything and you're interested in any of these programs, please send me an email and I will get back to you just as soon as I can to kind of fill you in on what's going on. So with that, I'm going to go through the thing and see if, let's see here. See if there's any other questions.
I have asked Kathleen to stay on, Mark, because she had raised her hand. So if and Kathleen, you're welcome to unmute yourself and just turn your audio on so you can just ask Mark a question directly.
Okay. Yeah, and Mary Beth, she did make the comment that if you don't, so I'm assuming don't pay taxes and try to go back the next year, you have to pay with late fees to them before they let you. I guess that may be a sales permit. So, but she doesn't know. She doesn't, she just heard that from the grapevine. So, yeah, see, that's kind of stuff with the sales tax, right? This record keeping is important for everything. So, okay. And I think yes, Rosemary, we would love to come to Santo Domingo. We're down in that area with IAI, of course, with COVID, we can't do anything, but you guys are definitely on our list. And so we'll keep you guys posted anytime when we have any IAI trainings. We're working on getting those scheduled for the first part of next year. Okay, thank you for everybody. Could we see the deduction slide one more time? The deduction slide. Daniel, give me a little bit more information. Is it the spreadsheet or is it something else? So Daniel, I'll stay around and I'll change it when you type that in. It was one of the last. Is it? Back over here in. Let's see. There's one. I'll figure this out with Daniel. Daniel. What I can also do is send you the presentation. Then you could have it all. And of course, I'm more than happy to talk with you offline. So.
I'm so sorry. I'm unable to put my hand down.
Oh.
I apologize.
Did you have a question?
I don't have a question, but I'd really like the presentation. I was trying to do snapshots of the screen, but it blocks out a lot of things.
No problem at all. We'll definitely get it out. We'll get it out to everybody, and we'll also send everybody out the PowerPoint not the PowerPoint, the Excel spreadsheet as well, so you guys can have that. I'm just going to do a little more work on it and make sure that the formulas work so that you guys, when you punch stuff in, can work. And of course, like I said, we're always here to help you. So if you need me to edit that at all, I'm more than happy to do that as well. Okay. All right, guys. I know.
One question.
Oh, go ahead.
So when filing with a nonprofit and having like the budget at the end of the year, we also have a fiscal, we're like as a fiscal sponsor. So would that all be like just considered one, like one sheet or all together, or at the end year, like is everything separate, but because it's still like under the same nonprofit?
So you guys are the nonprofit and you guys are the fiscal sponsor for another organization?
Yeah, so I'm with a nonprofit. We're on the board, but we also have like under the umbrella like a youth group
right,
that gets grants also under our nonprofit. And so it's all under one umbrella, I would say.
You know, I actually don't know the answer to that. You know, and so I'm gonna do an assuming here, but this could be way off because obviously, you know, we're a nonprofit, and you would have to report those funds in some way. I just don't know, and I'm assuming they would go on your 990, but I just don't know because technically those funds, you know, are not yours. I mean, or are they yours? You know, I mean, so that's a different thing. You know what I'm going to do though? I'm going to do some research. I'm going to talk to our tax guy, and so can you put your email in the chat box, and I will definitely get back to you on that because that's very interesting. A good question because we actually have an organization we're working out at Navajo that is also doing some fiscal sponsorships. So I'll ask them as well because they may know the answer, and I'll fill you in.
Awesome. Thank you so much. This was very, very helpful. I just am glad we were able to attend.
Oh, it's my pleasure. Thank you very much for coming.
Don't end the meeting, Mark, because I'm actually staying on to talk to Sierra Green.
Okay, sounds good. Should I go then?